indicates a decrease by 8.4% between 2015 and 2016. The most common conditions for maternity admission were postpartum anemia, eclampsia, hemorrhage, pregnancy-induced hypertension, abortion, to name but a few. While for neonatal against tuberculosis in 2015 was 93%, and 2016 was 90%. Penta-1, it's a combination for 3 antigens, was 81 in 2015 and 86 in 2018. Penta-3 was 77 in 2015 and 65 in 2016. Measles was 72% 2015 and 60% in 2016. Drug revolving fund. In 2015, a total sum of $1,275,050 was revenue collected from user fees, compared to $1,615,075 in 2016. Achievements. 1. Male clinic introduced to enhance male participation in reproductive health for improved health outcomes. Having a Gambian man present during the delivery of his or her wife is never thought of before, but this has happened in Bundung and it continues to happen. Maternal-mortality ratio has been maintained to the minimum, 1 in 2015 and 1 in 2016. Stillbirth rate also at a bare minimum of less than 2%, and live birth rate is almost universal. Challenges. The uptake of bed nets was low among pregnant women as they prefer the conical type than the rectangular nets. Intermittent stockouts of essential medicine, laboratory agents, and consumables was not uncommon during the year under review. Inadequate number of required human resource. Example, there is no specialist obstetrician or gynecologist, and only one sonographer attending to 4,900 women in the year. Trained nurses and midwives were also in short supply. Late antenatal booking among pregnant women hinders the delivery of all the required care to those women who register after the first trimester of pregnancy. The last and not the least, is the road condition from the hospital to the main road is tough for patients on referral, especially during rainy season. I thank you all for your kind attention.
Thank you very much, CEO. And if you can also provide a copy of the summary of the activity report to the committee, and if you also equally have a soft copy as well, we may need it, of all the reports. Thank you. So we now go to the activity reports for 2017-2018. Okay, can we now move to the activity report 2017-2018 and the financial statement as well? So I think we'll start with the financial statement. I wasn't around when you started the meeting, so we start with the financial statement 2018. But I do hope that you have provided a copy of the financial statement to the members as well.
Mr. Chair, this is the 2017-2018 financial statement, statement of system payment for the period.
Which page?
Page 9. Start with the receipts. Subvention received during the period is 19,824,578.82. Service fees to the drug revolving fund is 1,879,200. We are able to attract some donations, that's 75,000. Interest income from our savings account attracted 30,528.26. We receive subvention in form of 1/6 from the government, that's 110,975. Rental income 60,000. Other incomes 28,841.50, amounting to total income receipts of 22,009,123.58. Payments during the period, including salaries and allowances, 18,638,873.88. Medical and clinical services, 2,021,999.94. Operational expenses, 1,701,823.32. Repairs and maintenance during the period, 710,401.85. Accommodation and rents payments for our equipment doctors, 24,000. Office equipment, 205,466.50. Office furniture, 88,700. Bank charges, 79,543.73. This little accumulated payment, total payment of 23,470,809.22. This leads to a deficit for the period about 1,161,685,685.64. Opponent balance for the previous period of 2016 is 1,517,793.94, giving us a closing balance of 56,108.30. Thank you.
Thank you very much. So we now go to the management letter 2017-2018, the audit opinion as well.
I read the opinion for 31st December 2017. Opinion on page 7. We have audited accompanying financial statements of the Bundung Maternal and Child Health Hospital for the year ended 31st December 2017. These financial statements comprise of statement of receipts and payments and a summary of significant accounting policies and other explanatory information set out on pages 9 to 17. In our opinion, the financial statement and related notes set out on pages 9 to 17 present fairly in all material respects of the statement of financial performance for the year ended 31st December 2017, in accordance with International Public Sector Accounting Standard IPSAS cash basis. I wish to read the emphasis of matters. We draw the attention to note 18 in the financial statement, which describes basis for revising the 2017 comparative closing balance. The 2016 financial statements were prepared using the bank statement opening and closing balances, which has now been changed to the cash book balances. Our opinion is not modified in respect of this matter. Thank you. The management letter is combined, so I suggest we they read the 2018 before we read the management letter. The management letter is for 17 and 18 combined.
You can proceed with the financial statement.
Yeah.
2018.
Page 25. Page 25. The statements for receipt and payments for the period ended 31st December 2018. Total receipts in form of subvention received from central government. In 2018, we received 27,989,065.40. Our revenue generation through service tickets, that drug revolving fund, 1,840,700. Donations received 517,625. Our interest income from savings accounts 13,890.98. Rental income 69,000. Other incomes 75,818.37. Total receipt for the period 2018 is $30,506,099.75. Payments during the period 2018: salaries and allowances 22,435,288.47. Medical and clinical services 2,022,152.96. Operational expenses during the period 2,039,138.71. Repairs and maintenance 688,406.55. Accommodations paid during the period 176,500. Withholding tax paid 65,335. Office equipment 1,267,950. Bank charges 110,820.18. Total expenses or total payments for the period 2018 December 31st is 28,805,591.87. Surplus from the previous period 1,700,507.88, giving us a closing balance for the year ended 31st December 2018, 1,756,616.18.
Price statement of receipts and payments, and a summary of significant accounting progress and other explanatory information set out on pages 25 to 34. In our opinion, the financial statement and related notes set out on pages 25 to 34 presents fairly, in all material respect, of the statement of financial performance for the year then ended 31st December 2018, in accordance with International Public Sector Accounting Standard IPSAS CAS basis. We move to page 44 now. (3.1.1) Financial Reporting Framework. Finding: we reviewed the financial statements and noted the following. The hospital did not prepare and present its financial statement in accordance with International Public Sector Accounting Standards IPSAS CAS basis as the adopted financial reporting framework in preparing the financial statement. The financial statement consists of statement of receipt and payment, statement of cash flow, and balance sheet as opposed to IPSAS CAS basis requirement. The accounting policies and explanatory notes were not adequate because there were no clear policies for treatment of fixed asset in the financial statement. Recommendation: management should ensure that the financial statements are revised, which will exclude statement of cash flow and balance sheet using the appropriate financial reporting framework in the preparation and presentation of the financial statement. There should also be significant adequate disclosure of accounting policies and notes. Auditors further comment the financial statements were appropriately revised to be in line with IPSA's cash basis requirement. Non-maintenance of general ledger. We noted that the hospital did not maintain a general ledger for the recording of transactions from the cash books and preparation of financial statement for a given year end. Recommendation: general ledger should be in place to record transactions and balances. The 2017 and 2018 financial statements should be revised according to the ledger balances and the 2016 financial statement restated. Auditors further comment the adjusted 2017 and 2018 ledgers were presented for our review on the 3rd September 2022. The ledgers were reviewed and were in line with the financial statements. Opening balances. Finding opening balances in the statement of receipts and payments where bank balances instead of cash book balances as required by the above standard. Details below are the bank opening balances. Recommendation: management should ensure that the financial statements are revised using the cash book balances and submitted to the Office for Audit Inspection. Auditors further comment situation regularized and resulted to revising the 2016 closing balance in the financial statement. Lack of adequate disclosures. Finding: we noted that notes 3 to 29 to the financial statements were inadequate. Some were without value, expenditure heads were grouped together, example, training and traveling, and some were without adequate descriptive notes. Recommendation: management should revise the financial statements with adequate disclosures notes and submit to the Office for Audit Inspection. Auditors further comment the financial statements were appropriately revised to be in line with the IPSA's requirement. 3.2.1 Non-maintenance of revenue collectors cash book. Finding: we noted that revenue collectors of the hospital did not maintain cash books to record sale of tickets to patients. However, sold tickets were recorded in loose sheet of papers which were not properly filed for confirmation. Recommendation: management should ensure that a cash book is maintained by each revenue collector to record all ticket sales on a daily basis. Auditors further comment to be verified during our subsequent audit exercise. Improper maintenance of cash book. We noted that the hospital did not maintain a proper cash book for the drug revolving fund account. The cash book was in Microsoft Excel, which did not show opening and closing balance, and it was not casted. Recommendation: the cash book be adjusted and the financial statement revised accordingly. Auditors further comment the first cash book presented was not appropriately prepared. It was adjusted after it was queried. The adjusted cash book was reviewed and found appropriate. Transactions not recorded in the cash book. The hospital did not record some of its transactions in the revenue cash book. These were in respect of DRF deposit and interest income of 174,234. Below are the extract from the bank statements entry. Recommendation: management should adjust the cash book, revise the financial statements accordingly, and submit them to this office for audit verification. Auditors further comment the cash book and the general ledgers were updated using the correct dates. The additional correction done by management were also as a result of audit recommendation for the proper performance of bank reconciliation. Page 53, misclassification of donation. We noted misclassification of donation received of 5,500 euros on the 15th March 2018, equivalent to 317,625 in the 2018 financial statement. This was recognized as subvention received. Recommendation: management should ensure that this is charged to donation account and the financial statement adjusted accordingly. Auditors further comment the financial statements are appropriately adjusted. 3.3.2, lack of time and pay sheets for daily paid staff, page 55. The hospital did not maintain a time and pay sheet to record the attendance of daily paid employees. We were informed that daily paid staff signed in the main register of the hospital, but there was no evidence provided to confirm it. Recommendation: a time and pay sheet should be introduced to keep record of the number of days worked for each by staff. Auditors for the comment: this will be reviewed during the next audit. Non-maintenance of personnel files. We noted that 5 out of the 8 wages earners were without personnel files as listed below. Recommendation: management should ensure that personnel files are maintained for all staff. Auditors for the comment: this will be reviewed during the next audit. Lack of appointment file on page 58. We noticed that the hospital did not maintain a staff appointment file to keep records or document of applicants. Recommendation: management should put in place an appointment file to keep all application letters, minutes of interview, advertisement for vacancies, etc. Auditors for the comment: this will be reviewed during the next audit. Page 60, payment vouchers not posted in the cash book. The hospital did not post some of its payment vouchers to the cash book as provided below. Recommendation: these payments should be posted to the cash book and the financial statement adjusted accordingly. Auditors for the comment: both the unposted expenses and the ones said to be posted in the DRF account were reviewed and found accurate. Payments in the bank statement not posted in the cash book. We noted that some payments in the bank statement were not entered in the cash book. Details are below. Recommendation: these payments should be recorded in the cash book and the financial statement adjusted accordingly. Auditors for the comment: both the cash books and the financial statements were appropriately adjusted. Three point 4.6, payments without adequate supporting documents. Finding: we noted that some payments were without adequate supporting documents as detailed below. Recommendation: management should ensure that all payments are with supporting documents as required by the above regulation. Auditors for the comment: action point will be reviewed during the next audit exercise. 3.4.7, use of one payment voucher number for 2 different payments. We noted that some payment vouchers were of the same payment voucher number for different payees as detailed below. Recommendation: management should ensure that each payment voucher be given distinct payment voucher number. Auditors for the comment: action point will be reviewed during the next audit. Non-deduction of withholding tax, 3.4.8. Finding: the hospital did not withhold 10% of the payment as withholding tax from suppliers of goods and services for remittance to Gambia Revenue Authority. Sample of payments without deducting withholding tax are detailed below. Recommendation: management should ensure that withholding tax is deducted from all suppliers as required by the Income and Value Added Tax 2012 in order to avoid being held liable by GRA. Auditors for the comment: action point will be reviewed during the next audit exercise. However, the inclusion of DRF was an oversight. 3.5.1, non-compliance with GPPA regulation. Finding: we noted that the hospital did not fill some of the GPPA forms in its procurement process as required by the above GPPA regulation. GPPA forms such as local purchase order and payment authorization forms were not filled. Sample of transactions are shown below. Recommendation: management should ensure that in future, going forward, all the required GPPA forms are filled for all types of procurement. Auditors for the comment: action point will be reviewed during the next audit exercise. Non-maintenance of petty cash book on page 71. Finding: the hospital did not maintain a petty cash book to record monthly petty cash replenishment and expenses. Recommendation: a petty cash book should be maintained to record all the petty cash transactions, showing both payments by budget line and replacement at any point in time. Auditors for the comment, during the audit exercise, we were informed that the petty cash register on soft copy was in place in the previous years, but they stopped using it. However, action point will be reviewed during the next audit exercise. Page 75, field allocated to unauthorized staff. Before that, I wish to read page on 3.65, splitting of petty cash expenses. Finding, we noted that the hospital split some of its petty cash expenses to meet the required threshold of petty cash expenses. The petty cash expenses are of the same nature, date and payee. Details are below. Recommendation, management, the hospital should desist from such practice and adhere to their petty cash expenses procedure for better internal control implementation. Auditors for the comment, action point will be reviewed during the next audit exercise. 3.7.1, we noted that the hospital allocated fuel to some managers who were not part of the authorized list by the CEO and board chairman, dated 28 September 2016. However, we were informed that the list authorized for fuel allocated was discussed at a board meeting, but minutes were not provided for confirmation. Detailed below are a list of unauthorized staff allocated fuel during the period under review. Recommendation, management should provide genuine explanation as to why issuing fuel to unauthorized staff. The hospital policies should be adhered to at all times, and only people within the approved list should be issued with the fuel. Auditors for the comment, this was on a monthly basis, not occasional. However, management action point will be reviewed during the next audit exercise. Non-performance of bank reconciliation statement. The hospital did not perform monthly bank reconciliation statement for the account stated in the table. Recommendation, management should ensure that the bank accounts are reconciled with their respective updated cash book and evidence furnished to this